In this video, I'll show you 10 of the worst investments that you can make. I'll also show you why these investments are a bad decision when choosing a vehicle to grow your money. And stick around till the end of the video because avoiding these investments could be the difference between you retiring rich and you retiring broke. Hi, I'm Jeremy Zargami, and welcome to my channel. Today, I'm going to show you the top 10 worst investments that you could make this year. If you haven't already, click that like button, because the way the YouTube algorithm works, unless you hit that like button, YouTube will show this video to less people. So to help out the channel and to help more people see this great content, hit that like button down below. And if you're a beginner investor, don't forget to subscribe. This channel is all about helping out new investors and guiding them along on their journey of growing their wealth. So be sure to subscribe and hit that notification bell so you can see every time I post a new video. I post a new video every Monday at 12 p.m. Let's get into it. The first bad investment on my list is penny stocks. A penny stock is a small company that sells its stocks for less than $5 per share. If you've ever seen the movie Wolf of Wall Street, these were the stocks that they were selling to people. Usually these companies are not solid companies to invest in, and many times it's hard to find adequate information about these companies' financials to know if it's truly a good investment. While it can be enticing to invest in a 50-cent stock because you think it only needs to go up to $1 and I'll double my money, the problem is that's rarely the case. There's so much speculation and volatility when investing in penny stocks. Many investors lose all their money trying to hit it big in penny stocks. I would avoid penny stocks and just slowly invest in more reputable companies. Even if you can only afford fractional shares, it's a much better bet than betting on penny stocks. The second bad investment on my list is options, but I like options. No, not those kind of options. Options contracts. Options are a contract that gives the investor the option to buy or sell an asset at a specific price on or before a specific date. To be successful with options, you have to guess 3 separate things correctly. You have to guess if the stock is going to go up or down. You have to predict how high or how low the stock price will go. And lastly, you have to guess what time frame that stock will hit that price. You only ever hear success stories about options. You never hear about the stories where people lose a ton of money. This is basically just gambling, so I strongly suggest to stay away from options. The third bad investment on my list is SPAC Stocks. SPAC stands for Special Purpose Acquisition Company. This is a company with no commercial operations that is formed strictly to raise capital for an initial public offering for the purpose of acquiring an existing company, also known as blank check companies. Most SPACs underperform the stock market and eventually fall below the IPO price. Given SPAC's poor track record, most investors should be skeptical to invest in them. We've seen this recently with Lucid Air and Churchill Capital. There were rumors that Churchill was the SPAC that would help Lucid go public, and so the stock shot up like crazy with that news. But now there's news that Lucid might use a different company to go public. So all of those people who invested in Churchill might lose a ton of money. So I would stay away from the speculation and wait until it's a done deal to invest in these companies. The fourth bad investment on my list is CDs. No, not those things you used to burn mixtapes on back in the day. CD stands for Certificate of Deposit. A certificate of deposit is a savings account that holds a fixed amount of money for a fixed amount of time, such as 6 months, 1 year, or 5 years. And in exchange, the bank will pay you a higher interest rate. When you cash in your CD, you'll receive the initial investment plus any interest. The problem with CDs is that it locks your money up for a long period of time and you can't touch it, so the money is very illiquid. You also don't get a high enough interest rate to make it worth your while. You're much better off putting that money into a low-cost index fund than a CD. The fifth bad investment on my list is annuities. With an annuity, you give a lump sum of money to an insurance company and they will pay you a certain amount of money each year for the rest of your life. Sounds great, but it's not as great as it seems. These annuities have huge fees that cut into your returns, which makes a ton of money for these companies at your expense. It would be better to find blue chip dividend paying companies to invest in instead. Look for companies that are dividend aristocrats or dividend kings. These companies have been increasing their dividends for 25 to 50 plus years in a row and will pay you a good amount of passive income in retirement while also having the potential to grow. The sixth bad investment on my list is savings accounts. Savings accounts back in the day used to actually pay enough interest to make it somewhat worth it to hold your money in them. Savings accounts today only pay you a few cents a year for holding your cash in them. They are a terrible place to hold your money in my opinion. Money that sits in your savings account is losing an average of 2 to 3% per year due to inflation. So you must make that money work for you and put it in something that will at least grow enough to combat inflation. The S&P 500 has an average annualized return of 9.8% over the last 90 years. So parking your money into a low-cost index fund that tracks the S&P 500 is a great idea, instead of just letting it sit in your savings account and lose value. It's important to note that I'm not talking about your emergency fund. You can have that in a high-yield savings account if you would like, even though those are only paying about 1% max right now. At least it's something and you can have peace of mind knowing that it's there. The seventh bad investment on my list is collectibles. I personally like collectibles, but I think it's a bad investment if you go too overboard with it. For example, if you like Jordans, just collect a few of your favorite pairs, but don't have so many that you need a whole separate room in your house just to store all the boxes. I know they can be worth something in the future, but if you aren't flipping them as a business or side hustle, I don't recommend doing it. That goes for any collectibles. That could be Beanie Babies, trading cards, American Girl dolls, stamps, comic books, rare coins, etc. Unless you have a plan of how you're going to sell these things, don't invest in them because they aren't aren't going to make you money while you wait to sell them. And there's no guarantee that they'll be worth what you think they'll be worth in the future. Now, if you just like them and you aren't trying to buy them as an investment, then go ahead. But there are far better things to invest in than collectibles. The 8th bad investment on my list is day trading. Day trading is becoming more and more popular with apps like Robinhood and Webull. Old brokerages would have $5 to $10 fees every time you'd buy and sell a stock, which deterred a lot of people from day trading. Now that these apps have zero free trading, people can buy and sell as much stock as they want with no fees. While the zero fees are great for your average retail investor, it does encourage more people to day trade. Much like options, you only hear about the success stories of day trading. You see the YouTube ads of people asking you if you want to make $10,000 a day trading, and then they try to sell you their course on how to make guaranteed money day trading and how easy it is. Disclaimer, it's not easy and it's not guaranteed money. You're actually more guaranteed to lose money than to make money. 80% of day traders lose money and then quit within 2 years of starting. I don't want that to be you. So make sure you subscribe if you haven't, because I don't have a course to sell you and I won't guarantee that you'll make $10,000 a day, but I can guarantee you won't lose $10,000 a day with this tip here alone. So you're welcome. The 9th bad investment on my list is altcoins.
They're going to the moon.
While I love crypto and I think it has a very bright future, many people are trying to day trade or swing trade with the smaller, lesser known coins that are known as altcoins. This goes back to my day trading advice. More people lose than win, so you're better off hodling Bitcoin, Ethereum, and maybe Litecoin. But messing with these altcoins is dangerous, and I would stay away from them until they mature more, and we start to understand what their actual practical function is as a crypto asset. The 10th bad investment on my list is scratchers. I don't know who needs to hear this, but scratchers are not an investment, so stop buying them. Do you know what they call the money that the government makes on the lottery? Excuse my language, but they call it the stupid tax, because that's what they think of the people that put their money into it. You're more likely to be struck by lightning while being attacked by a shark than winning the lottery. If you want to be a millionaire so badly, take that money and invest it in a Roth IRA and max it out every year for the next 30 years and you're guaranteed to be a millionaire. That's a much safer bet and you'll pay way less taxes too. What are some of your least favorite investments? Comment down below. If you like that video, I put another video right here that I think you will like. So click on that video and I will see you in the next one.